Get ready for more valuable financial insights from Northern California's premier retirement income planners, Dan Ahmad and Jim Files, owners of Peak Financial Freedom Group. For more information, go to peakfin.com. And now, here's Dan and Jim.
I'd like to welcome you to the Peak Financial Freedom Hour. I'm Dan Ahmad here with my partner, Jim Files. And I'd like to thank everyone who've listened to us for years and years and years. And also thank you, new listeners who are out there trying to gather data so that they can make the proper decisions for retirement. And when you look at the information that's out there on how to make the proper decisions for retirement, it's slim. One of the things we just did is try to make it easy on people to show them what they have to do. And we did that by writing a new book. And usually our books are fat and they take 2 weeks to read. So we wrote a skinny book. It's called The Golden Promise. It takes about an hour and a half to 2 hours to read. And The Golden Promise is based on the premise that every single thing about your money better be in writing or don't do it. Because right now with the world, with fake news, with AI, with all the stuff that's out there, you cannot believe anyone. And you should not believe anyone, even if you've known them for 30 years, unless they put the data in writing. It's one of the primary tenets that we live on here at Peak. What we found is we are the only firm we found. I'm sure there's some out there somewhere in the nation, but we're the only firm we found in the nation that puts all the things we put in writing for you so that you can understand your money and feel comfortable and certain that your plan is going to work. So you can always go to our website and listen to our podcast. You can listen to this radio show and watch it because we record it. You can also go to YouTube and watch our recorded TV shows, a bunch of educational videos. And if you have any questions, please don't hesitate to call. If you'd like a free copy of the book, The Golden Promise, give us a call, pound 250 and say the keyword money, pound 250 and say the keyword money. And if you want to meet because you have questions or you just have questions, call pound 250 on your cell phone and say the keyword money. Jim, why don't you start us off with a quote of the week? Give us some financial wisdom from someone smart out there.
Well, I came across this weekend. It's quite interesting. You'll recognize the name is Albert Einstein. He says, we cannot solve our problems with the same thinking we used when we created them. And that's so apropos to what we say here and talk about on our radio show, on our TV show, on our podcast, at our workshops, at our seminars. If you come into our office, that's exactly what we talk about. In order to solve your problems, you have to look at the current situation and put together a plan that's going to meet those expectations, those goals, and those objectives today, right now. Not something you thought about when you're 20, 30, or 40, or even 50, but if you're getting close to retirement or in retirement, you have to identify every objective you want your money to do for you. We help you do that. We'll walk you through it. We'll make a list of it. And then what we have to do is create a plan that's going to solve those objectives, put that plan in writing before we implement the investment strategy so that you have the highest probability of the plan working out for you.
Well, what you just said from Albert Einstein, that statement, we cannot solve our problems with the same thinking we used when we created them, is pretty funny because that pretty much is the politically correct version, a dummied down, a light version of the other quote we know from him. And that is, if you do the same things over and over again, you cannot expect different results.
Right.
That's the definition of insanity. So what you just said is kind of like the mellow version of that.
Yep.
And kind of like what we tell people, you can't do the same things you did when you were 20, 30, or 40, or even 50, now that you're 60, 65, or 70, because there's a high probability it won't work. So you have to change things because when you're young, you can't. Then you solved your problems by investing as much money as you could and being very aggressive. When we're old, we now have our assets saved. We can't be in a position to lose large chunks of money, and we have to find a way to let that large chunk of money create income for us. So you can't do the same things. Otherwise, if you continue to do the same things you're doing right now and you're worried about your money, what does that mean? It means you're going to continue to worry about your money, and that's the definition of insanity.
Yeah, you have to change it up. And if you're listening right now, if you're getting ready to retire or you're in retirement, which are the folks that we deal with here at our firm, and we're very skilled at what we do. We have an extreme amount of knowledge of putting together plans to mitigate your risk, number one, against a large market drawdown or loss, and to put together an income plan and architect it so that you can see it for the next 30 years. If you're getting to that point, right now, everybody's worried about the world. They're worried about the market. They're worried about the wars. They're worried about what could happen with AI and the job market. They're worried about the stock market going down. There is a way that you can reposition your entire assets right now so that you can use strategies to help fight off what's going to likely happen. And if it happens to your portfolio now where the market go down and you're not positioned correctly, you're going to suffer a big loss, and you don't need to if you're using strategies and financial instruments that are available if you were educated on how to use those, Dan. And people just don't understand that.
And that's the key with, I think, how much people worry about their money, especially getting ready to retire or in retirement. It's because they haven't been educated on what they should be doing now that they're at this point in their life. All of our clients have been very successful in saving money, because if they haven't saved any money, they don't need us as a planner. If you haven't saved money, you don't need a planner. But all our clients have been very successful, saved $1 million, $2 million, $3 million, $4 million, $5 million, $8 million of assets. They've been done awesome. Very few of them feel like it's enough, even though for most of them, it actually is enough once we do a plan. And when you look at these people, they've saved all this money, and they've done it simply because they put their head down. They kept it going in each month to the 401k, 403bs, whatever. And they found out, every time, oh my gosh, I've succeeded. I've accumulated a lot of money. The problem is they have not been educated on the next step of retirement. They know how to accumulate assets, but they do not know, and no one's taught them how to protect their assets against large losses, asset preservation, and then use the assets to create a high level of income that's guaranteed for as long as they live. And when you think about it, what do you want your money to do once you retire? You don't want to lose a lot, and you want it to create a high level of income guaranteed for as long as you live. That's it. But it also has to be put in writing.
Yeah, and if you sat down right now, if you're married, you have a spouse, if you're getting ready to retire and you're in retirement right now, you probably worry about your money a lot for things that we talk about on the show, because it's everyday life, right? Things happen. But if you had everything in writing for you, and you knew a portion or even a large portion, your money was going to be guaranteed, that you still had the prospect of growth in your portfolio. You knew that if the market crashed by 30, 40, or 50%, you wouldn't lose very much based on how you're positioned. You would feel a lot better about your life. You feel a lot better about living, because you wouldn't have that anxiety of worrying all the time about what if. And the only way that you solve those what ifs is having a planner. And again, we're going to tout us, because that's exactly what we do. Our skill set right now with what we do every day is based on your need. What do you need to do to reposition your assets to make sure you don't make a financial mistake?
Well, it's not even touting us. I think just do a test. If you're working with an advisor now, or you're thinking about working with an advisor, ask them a few specific questions. Number one, will they put in writing how much risk you're taking, that if the market crashes, how much you'll lose? Number one. Number two, will they put in writing the total fees you're paying, the fees you see and the fees you don't see? Number three, will they put in writing how much income you're going to receive and from what source for the next 30 years? And number four, will they put in writing how much income tax you're going to pay when you're taking your income out? If you ask them those four questions and they say yes, they'll put a plan together for you, they'll do all of those things, we tell you, great, go ahead and work with them. We just know you're not going to be able to find one that does that other than our firm in this area. We haven't found them. If you found them, call us, let us know. We'll put them on our approved list. So that comes down to risk, fees, income, and taxes. And it's what every single person listening wants to know right now. They want to know how much risk they're taking, and they want to reduce it. They want to know how much fees they're paying, and they want to make sure they're managing it. They want to know where their income is going to come from. They want to know how much tax they're paying.
Yeah. But the key is it has to be in writing. Those questions that Dan just proposed have to be in writing. Not somebody telling you, you're going to be fine, Paul. You'll be fine. If the market go down, we're going to adjust accordingly. You're going to be fine with your income. Don't worry about it. You've saved enough money. That isn't good enough. We're dealing with specificity here. Ask those four questions of your advisor or of yourself if you don't have an advisor. If you don't have those methodically put together in a plan, in writing, signed off, in our case, by fiduciary, you're at risk with your retirement, period.
Well, and if you want to see all of this type of information about a plan in writing, simply call pound 250 on your cell phone, say the keyword money, and let them know you would like a copy of the Golden Promise. And now, Jim, describe why we wrote the Golden Promise and what the Golden Promise will do for someone that's getting ready to retired, as far as how it can potentially change their life. If they read this book, spend an hour and a half to 2 hours. And I say this because You and I know that the average person listening now that's retired or getting ready to retire, they spend far more time planning their annual 2-week vacation than they plan on spending for planning for their retirement. So if they spend an hour and a half to 2 hours, what will that do for them if they just read that book?
It'll blow your mind if you actually see what's been put together in writing, exactly what our firm does for every single client. It'll bring forth all those thoughts that you already have about retirement and those concerns and those worries. It identifies every single step in our process, step 1, step 2, step 3, all the way through step 7, what each meeting is going to consist of, what we're going to discuss at each meeting, what the objectives are and what the end results are, and how a plan is going to be put together precisely for you as a retired person or soon to be retired person. In advance, you're going to read this. It's not just us talking. You're going to be able to read this. I actually believe someone can read it in 40 or 45 minutes. Yeah, it might take an hour and a half or 2 hours if you want to get really, really into the detail of it, but it's about 80 pages long. It's not really long, but it's so packed. Big writing, pictures. It's packed with data that you are thinking about if you're getting close to retirement or in retirement. It's just answering those questions. Even if you don't want to come in and you don't want to meet with us, that's okay. Call our office. We'll send you one of these. Read it. Get an idea of what we're doing for our clients, and then stack that up against anybody else, and then determine if it makes sense to have a meeting with you. Because all we're going to do for you is make sure that we've done everything possible as a fiduciary, put your interests above ours so that you have the highest probability of success in retirement.
We'd like to welcome you back to the Peak Financial Freedom Hour. Dan Allman and Jim Files here. And I'd like to thank you for listening to us and trying to gain the information you're going to need to make the best decisions about retirement. And we know it's tough because there's not a lot of education out there about how do you make decisions once you're retired. There's a ton of information of how to accumulate assets, how to allocate your assets, how to invest for growth. The problem is once you retire, getting ready to retire within 5 years of retirement, everything has to change because you have to minimize risk. You have to make sure you've minimized the chance of a large loss, and you have to find out how in the heck are you going to use your assets to create a steady, dependable, even guaranteed flow of income that will last for as long as you live. And on top of that, make sure you're not in a high tax bracket. All those things have to come about. Well, we always feel that Peak Financial is one of, if not the top resource to educate people in the Sacramento area about how to plan for a secure retirement. And we do that, of course, through our written retirement income plans. But if you've saved $1 million or more and you're 59 or older, call pound 250 on your cell phone and say the keyword money, and you have the opportunity to receive a free copy of our most recent book, The Golden Promise, which teaches you everything about what you need to do to create a retirement income plan. And you can also talk to them about attending one of our free dinner workshop seminars at one of Sacramento's finest restaurants. So you don't have any pressure. You don't have any obligation. All you have to do is get a book. All you have to do is show up, listen to the information, and we will guarantee it will provide a higher level of education about your money than you've had before you read the book or before you come to the workshop.
You know, Dan, really, it's a phenomenal offer because a lot of people listen to us. They love what we say, but a lot of people say, well, I don't know if I want to go into the office and take time off work and do this or that. But if you do want to attend a dinner seminar, it's at one of the great restaurants in Sacramento. As you mentioned, Dan, if you just call our office, we can schedule it, no obligation whatsoever. You can listen to what we do. It's an hour seminar, and you can decide just to make sense to come in the office, right?
Yep.
It's an easy way of doing it.
Exactly. And people always say, well, why do you have a minimum number of assets or a certain age? Just because our data is not pertinent to you unless you've saved $1 million or more. And it's not pertinent to you unless you're 59 or older. So it will be pertinent to you if you do at some point in the future, do save $1 million more, or when you get older. But up until that point, we do is just for retirees and soon to be retirees. And that's why we have these minimums.
Yeah.
Today, as far as the topic, we're going to do a kind of a semi stand-up comedian one, but it's serious, but then there's funny stuff. And it's called Things You Can't Trust. And we're going to talk about things right now that we don't feel you should really place your trust in, both inside and outside of the financial world. So the first one, Jim, I'm going to ask you, should you trust gas station sushi?
Well, I don't think so, right? If you just listen to that question, it sounds terrible, right? Would you ever even do that? No, you wouldn't. And that's why you shouldn't trust anything unless it's in writing. And we can keep on harping on this every single show we do. You need to have everything about your money in writing before you invest any money.
So how about this one? Should you trust people who tell you to ride out all stock market declines regardless of the size of the loss?
Nope. I won't do it, and you won't do it either, Dan. There are strategies you can do to help you mitigate that risk.
And at that point, if they tell you that and you're 20, 30, 40, even 50, it might be okay.
Yes.
That's probably what you should do. The
Yes.
problem is we're only talking about our types of clients that are in that 55 older age. And if someone tells you to write out all stock market declines, regardless of loss, what if you're 55 right now? The stock market crashes 50% like it did in 08, and you're trying to retire at 60. Can you retire at 60?
Nope, not going to retire.
You just can't do it. So you can't trust that advice. People are not looking after your best interest if they give you that advice and you're in retirement or within 5 years of retirement. How about this one for myself? Should you trust emails with attachments from someone you don't know, especially if it's from a foreign country? The answer is no. And I still hear clients that click those emails, they click the links, they get in trouble. Oh my, it's just amazing. So no, do not trust. I don't trust anything with an email with an attachment unless I know it's coming from someone specifically that I know. And then I even ask them, did you send me this? Because I'm freaked out about it.
Yeah.
How about this one? What if someone tells you that your portfolio is safe and you won't lose much in the next stock market crash? It could be true and maybe you should trust it, but only, like you said earlier, if it's in writing. If you have a portfolio of 60% stocks or mutual funds, 40% bonds or bond mutual funds, and your advisor says, because you're worried about risk, and they say, oh, don't worry, you don't have that much risk. Well, it makes you feel warm and fuzzy inside, but never, ever, ever should you trust them unless they put down in writing how much that 60% stock, 40% bond portfolio will lose in the next stock market crash. If they put in writing, heck yeah, trust them. If they do not put in writing, do not trust them. How about this one? Nigerian princes offering to share a portion of their fortune with you via email.
I think we've all gotten that email before, right? All of us are tempted to open it, but don't open it. Don't respond to it because you know what the answer is.
Okay, how about this one? Should you trust a stock market that hasn't crashed in now about 17 years?
Think about that. 2009 was the last major crash we had, was the last major recession we had. And every 5 years, since 1929, the market typically goes down about 39%. We haven't seen that type of drawdown in the market since 2009. We are so overdue. It's phenomenal right now.
Well, and I think everyone, consumers especially, get caught up in what's happened recently. Well, we've had some really, really good years recently. The market's up. But if you go back to 2000 and the technology bubble, stock market went down about 54%, came back by 2007, dropped another 53.1, then recovered somewhere for most people between 2013 and 2019, depending on how heavily you were invested in technology, etc. Technology, some of those didn't get back until 2017. So when you look at those things, we say, hey, the market's up. But when we have the next decline and when the market's at a high point like it is now, probability wise, historically, we have a higher probability the market's going to go down significantly at some point, then go significantly up above where it's at right now, especially with price to earnings ratios, meaning what are the companies actually earning and what are they worth?
So that's why it's so key, Dan, that everybody be aware right now there are ways to modify, restructure your portfolio in anticipation of a market crash. We don't know what's going to happen, but we can modify it to make sure you're prepared correctly.
You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. And today we're talking about a couple of things. One, the absolute necessity to have a written plan to show where your income is going to come from, how much risk you're taking, and the fees you're paying, and how much money you might be able to leave to your beneficiaries. And we know it's very tough out there right now to find information on how you do those things, because every single person right now listening, if you're retired or getting ready to retire, you don't want to suffer big losses. You want to use your assets to create income, and as much as possible, as long as it won't run out, and as long as you won't be in a high tax bracket. You want to manage and understand what your fees are. You want to make sure you never run out of income, and you want to leave whatever's left to the beneficiaries. So to find that type of data or information is very tough. We educate the entire greater Sacramento Valley, whether it's our radio show, TV show, or books, website, seminars, etc. So we're going to offer you the same thing. If you've saved $1 million or more, or age 59 or older, call in on your cell phone, pound 250, and then say the keyword money, pound 250, say the keyword money. We will give you a copy of what I think is our best book we've written ever. It's called The Golden Promise, and it's very easy to read. It'll take you anywhere from an hour to 2 hours to read. I think it's 80 pages long, big writing, and it teaches you every single thing you need to know about creating a written retirement income plan. And it actually outlines in detail the process we go through for every single client to help educate and then put every single thing about your money in writing. So you can get that. There'll be no cost for that book. You can also, at the same time, if you'd like, sign up for a free educational dinner workshop at one of Sacramento's finest restaurants. Feel free, call pound 250 on your cell phone, say the keyword money, talk to them, see if it fits, if it works, and then we'll get you signed up for it. And those things can do some really good things. Today, we are talking about things you can't trust. So are these things we're going to talk about things you should trust or not? So here's one for me. Current politicians, past politicians, and future politicians. And for me, the answer is 1,000% no. Doesn't matter what politician they are. It's so hard to believe them because they all just say whatever they think people want to hear, or whatever the social media is trending, or whatever they think will get them reelected again. And it's just impossible. It's so sad that we're at this point, I think worse now than ever, where people in each party don't even trust their own parties anymore. So it's very tough. How about this one? The financial side is, should you trust if someone tells you that the stock market will always create 8 to 12% annual earnings compounded for you every single year? And my answer is no, because if you go back to 2000 and calculate out what the S&P 500 index increased by per year before fees, before taxes, and before income distributions, it's right at 6%. So how in the heck are we going to get 8% to 12% when the stock market's only average 6%? Then if you go back and go to 1996 and look at every 15-year time period from 1996 all the way through 2025 December, again, the stock market has averaged less than 6% in every one of those time periods. So how in the heck are we going to get that magical 12% rate of return?
Well, the difference is, I think people look at, there've been years where the market was up 20, 30, 35%, but there's years the market was down 40, 45, 50%. So you have to look at the average rate of return. Now, the caveat to all this is, yes, we're looking at lifespans where if you're 60 right now and you live 25 or 30 years, the data is pertinent. Now, if you go back to 1851, you actually do the analysis. Yeah, your average rate of return was higher because that's 150, 200 years of data, right? It's like we don't live that long in retirement. So you have to look at current time periods.
Well, think about it. With that data, the data was less manipulated than it is now, and the market was less manipulated than it is now. So it gave you a truer opportunity for gains then versus what's happening in the market right now.
That's exactly right.
Okay, how about this for you then, Jim? Should you put your trust in a new car salesman, a used car salesman, and the car repair shop owned by Vinny?
I would think not. And I think you can do your own research to determine, what you should pay to buy something and what you're going to get, what type of value you're going to get.
How about this one? Should you trust when someone tells you that mutual funds are safer than individual stocks?
No, not really, because what do you think is inside that mutual fund? A bunch of stocks, right? So yes, they can have a little bit less volatility, but you still own stocks or you still own bonds. That's what a mutual fund is.
Well, how about in 2022, long-term bond funds 20 years and older? In 2020, between 2000 and 2025, because of 2022 bond collapse, they went down 57%. How safe is it's the safest asset considered in the world, a federal government bond?
Yep.
And now those bonds went down 57%.
Yeah.
Okay. How about this one? For me, should you really ever trust the government? Well, that kind of goes back to the same one I answered for the politicians. I'm going to say no, because the government very rarely tells you what's right for you. They tell you what's right for the government. And give you one quick example, Social Security. If you go to the Social Security website or you call Social Security and you're on hold, both of those are going to tell you defer your Social Security till 70 and you'll get 8% raises per year, which is 100% accurate. The problem is they don't tell you then that you should really focus on how much are you losing in income in those years that you're deferring your Social Security. And we find that if someone takes their Social Security at 62 or 67 or 70, 62 is a better decision all the way through about age 80 to 81. And then if you compare 67, it's a better decision all the way through age 83. And you got to get to age 84 on average before taking your Social Security at 70 would have been a better decision. And you would have used up more of your own assets. So we do a Social Security calculation, which we can do for you. If that's interesting to you, call pound 250 on your cell phone, say the keyword money, and we can see if we can do that for you. How about this one for finances? Should you trust when you're told you've gotten high rates of return, but your statements don't reflect it? So your statements 10 years ago were 1.3 million, and your assets right now are 1.6 million. And they say, oh yeah, you had a huge $300,000 gain. Is that a big gain?
No, if you do the math, what is that, about 3% gain?
Probably.
Yeah.
How about this one? Should you trust the weather people on TV?
They're getting much better.
50% of the time.
They're gonna,
Okay. Should you trust when someone tells you that you won't run out of money during retirement, even if you have a portfolio of all stocks?
Negative. Nope.
You can't, because there's so much volatility associated with it. There's a high probability that if we have a loss, which we will have losses at some point, that you'll run out of income if you're taking income out of your assets. Dan Allman and Jim Files here, Peak Financial Freedom Hour. We're back. Thank you for staying with us. Today we're talking about things you can't trust. So if your husband says when you're driving, don't worry, I know where I'm going, should you trust your husband or not? I'm going to say probably not, because none of us as husbands like to look at maps. We will usually follow navigation, but not maps. How about this one as far as financial field? If your advisor says that they're your friend, and we would say never ever trust an advisor that either says your friend or that you have put in that category. And more likely you put them in the category because they're nice. They've worked with you for 5, 10, 15, 20 years. But your advisor is not your friend. They're not paid to be your friend. Your advisor is paid to give you the best financial decisions, the best financial advice. You can make the best financial decisions. So we know consumers really get close personal relationships with their advisors, and the advisors rely on that to keep their clients. We get and keep clients by building written, comprehensive retirement income plans, putting every single thing about their money in writing so our clients can reduce the amount they're worrying. And then our clients, I'm sure, do think of us as their friends, but we want them to first and foremost, Jim, think of us as their most trusted advisor.
Yep.
How about this one? Should you right now trust the news, whether it's on TV or the internet?
I think we know the answer to that one, right? It's real simple. You really can't trust any of that information any longer, because you don't know if it's fake news, real news. You don't know where it's coming from, who's stating it. It's kind of a disaster. It's unfortunate, but it's the world we live in today.
Well, I don't know if you read, but there have been more studies showing that anybody who watches the news religiously has a higher probability of depression than people that don't watch the news. I don't watch the news. Why do you think I'm so happy? I don't watch that stuff. No, I'm not watching the news. If something bad happens, I'll learn about it soon enough.
There's never anything good in the news.
Never.
It's always negative.
Never.
No matter what it
even
is.
when it's sports.
Floods, deaths, lightning strike, people get hit in the head with a baseball bat, you name it.
Well, think about it, even sports. Niners lose, Raiders lose.
Everything.
Kings lose. It's like, can't even watch that. How about then, should you trust if someone tells you that your beautiful pie chart portfolio that you have is diversified and you're safe and you're going to get really good returns without much risk?
I think you can trust it's diversified, nothing else, right? Because markets go up and down. Diversification, if you go back to 2022, both stocks and bonds fell at the same time. You got to be really careful with that.
Here's one for me. Should you trust your spouse if he or she is handling the money if there is no clear plan and things aren't in writing? And even if they're your spouse, the answer is 100% absolutely no. You have to have a plan in writing. So if someone at home loves to do the investing, then you have to invest the money as if you're retired, and you have to have a plan in writing that shows how much risk you're taking, and you both have to agree with that. You'll probably know how much fees you're paying, which is good. You have to be able to show where income is going to come from, and is it steady and dependable, and how much tax we're going to pay, and all has to be in writing. How about this one? Should you trust advisors who say you're paying only about 1% in fees? And that's how they answer it. And they do not put any of that data in writing. And the answer is absolutely not, because you might be paying the advisor 1% fee. So they might not be lying. Right. You might be paying them 1% fees, but you also might be paying 1% to a money manager. And if you have mutual funds, exchange traded funds, or index funds, there's going to be additional fund costs as well as additional trading costs inside those funds. So your fees might not be 1%. They might be 2, 2.5, even 3% for everything. So you can't trust it. If an advisor just says that, it has to be in writing. How about this one? What if your brother-in-law calls and says he wants to offer you the investment opportunity of a lifetime, Jim, and it's foolproof?
Were you listening to my phone caller this weekend with my brother-in-law? And the answer is no.
Okay, how about this? Can you trust an advisor who doesn't listen to you when you say you're worried and you want to take less risk? They just disregard your thoughts.
No, but it happens all the time, right? People say it all the time. I'm worried about my money, and don't worry, it'll be just fine. But it's not their money. It's your money. You should worry about it and make sure you're positioned correctly.
In fact, we just had a radio listener call in stating they want to come in and meet with us because they went to their advisor. It's a lady, went to the advisor, said, I don't want to take so much risk. I'm definitely at a different point. Advisor wouldn't listen and just said, no, we need to leave the money like this. She's like, I'm out. I need to go talk to someone who will at least listen to me. And I think that's one thing I always say, kind of in jest, but it's funny. You and I have extremely large ears, meaning that we listen better than other advisors because we know the best chance we have of getting a new client is to listen to what that client wants and then put a plan in writing together that gives them what they want. At that point, why wouldn't they enact their plan at that point?
Exactly right.
How about this one? A financial firm that says they will reduce your risk by adding bonds to your portfolio. Well, that's a financial firm that is so old school thinking. They're like 20 years old school thinking. Because right now, if you add bonds to your portfolio, what we found is it doesn't necessarily reduce your risk. In fact, between 2000 and 2025, if you added in the safest types of bonds, 20-year plus government bonds, those bonds would have went down by 57% during that time period, killing your portfolio. At one point in 2022, I believe if you had a 60% stock, 40% bond portfolio, what did that portfolio go down by?
22%.
So you have to be willing to lose 22%. No one's willing to lose 22% at retirement time. How about this one? This is a good one for you. What if you have a first date from an online service and they show up in a van or with his mother?
Look, he says it's a good one for me. What do you mean? I've been married for 40 years.
I know, because you have a daughter. So what happens if they showed up?
There you go.
And
you rephrased it. There you go.
What happens if they came up and then it's in a van or the guy brings his mother with him to take out?
Bad news. Bad news.
Okay, how about this last one then? An advisor says you shouldn't have much money in the bank because it's a waste of earning power.
Well, it's a waste for earning power for the advisor, right? Because you're not getting a fee out of it, but not for you. It's safe and secure. It makes you feel better, right?
Perfect. And we're always going to have, every one of our plans is going to have a certain amount of income or assets in the bank because bank money gives you flexibility, freedom, no fees, no risk, and it just makes you feel better.
For more information about Peak Financial Freedom Group or to schedule a consultation, just go to our website, peakfin.com. That's peakfin.com. And thanks for watching.